S&P 500 started out fine, seeing a continuation, and then all of a sudden some news hit, and that changed everything. Let's get to the news, and we can talk about what to do about it. So this was in the middle of the day, and we can see there at 11:21, and this was an escalation of the war overseas, and we're going to talk about this and what transpired here. There's a couple things that really stuck out about this, and that's where our focal point is going to be. Number one, once we broke down here, it happened in 2-3 minutes. You never came back. You made a low, then you have a lower high, and you have a lower high, and you rode the line the whole time. Now, you could say you're building this DTL, downward trend line, and that you're going to bounce. My issue with this right here, okay, I can see the rally through it, but then you died. You never made a higher high on it. I think you have to look at it this way. You have to judge this for what it is. So what I do with these kinds of moves is I'll make it a 5-minute bar. And I want to just get, you could also make it a 3, but I'll do 5. And then you look at this and realize you went nowhere. Low, low, low. And all you did was work it off. So essentially what happens here is you just have people that are saying, we're not buying up here. We're not selling. We're not selling. We're not selling. We're not buying until we get to here. And then they buy here, whoever's there. Once this person gets cleaned out or people get cleaned out, you were setting up for a break. So this put you in a really precarious position today in the market. Now, if you take the 50% line on the S&P and you drop that down on this mark, which is exactly what you should do with PPI tomorrow, and we're going to get to that as well so that you're prepped for it. But once you couldn't even get back above that level at 130, to me, there was really no reason to hold anything. It was pretty clear at this point that you just weren't going to rally and that you were just going to sell down to the end of the day, which is exactly what you did. Some names held, which is good. And that's good that you have buying in some names. But how much buying are we going to have if this escalates? And we'll talk about what this is in a moment. But let's just keep going through this. Let's go take a look at the NQ. And you can see the same exact thing, same exact pattern. And what this was just very simple. Get me out. I don't feel like dealing with it anymore. Down, and then you're just constantly making the what? Here's your high. Then you have a lower high, lower high, lower high, lower high, all through this. And you're just riding this level. And you're hoping that that buyer just stays there. Hope's not a strategy that I wish to employ. And you can even see it on individual names. For example, Apple was off to an excellent start, and I really do think that we would have seen a continuation today, but once you get another fly in the ointment, and we're going to discuss this in a second, that was pretty much it. You have the test, the break, the retest, the failure, and then you had 355. To me, I was kind of like, oh no, come on in, everything's fine. I usually believe the end of day market moves, but if you're going to move in the last minute like that, to me, that is a little bit of gamesmanship, in my opinion. And I'm not really buying what they're trying to sell there ahead of PPI and everything else. We'll see how it goes. If you look at the market in and of itself, you looked really good. But there were some things under the hood that just didn't make a lot of sense. So you have something like Key, for example, that was bought today, a 15% stake by Scotiabank. All it did was sell straight down. So they were looking for liquidity. If you look at Lilly, that had 2 more upgrades today of 1,100, all it did was open and sell down all day. Now, my concern with this is that you have good news and you're selling down and then you filled in this wick. So this could be day one before you have some kind of undercut here, which is really, frankly, where I think you're setting up for tomorrow with something like Lilly. But there's more with the macro before we get to the micro, because there are ways to trade in this market. You have to be fast. People will say, I'm a swing trader. I wish you the best with this. I did 3 swing trades last week. I'm already out just based upon what happened, and I'll walk you through why in a little bit here. So there's your gap now. If we take that level here before we go any further and just look at that level, let's draw this out a little bit here and take that to the 5. And you're right here on that gap fill. Let's blow this up so that you can see it. I'm not going to have time to edit this, so it is what it is. But you see the level right there? So then what you came all the way down, and you filled that level. And then after you hit it, what did you do next? You made a higher high. Test, bounced, retest, and then you ripped. Then you're here, and now we're about to close over 21. It's not really where you want to be. Now, how much escalation happens tonight with everything that's on the table? And we're going to discuss it on multiple fronts. And I'm discussing it from the standpoint of how it's going to affect the stock market. And that's the way that we do this channel. That's all that we care about here. But you need to remember this. This is what happened today. You gap filled and you held and you formed a doji. They bought bonds. They bought the 20-year. They bought the 10-year. You can see the yield dropping right there. And this is what's important. This is what they're doing right now. They're puking out RTY still, and this is forming a bear flag right here. But I think that this is really important to get, guys. They are buying yield ahead of PPI and into this evening. And then, of course, you can also see what happened with crude oil, which we're going to have to address as well. But crude oil just exploded to the upside based upon the news. So let's get to that news. So what caused the sell-off today? Well, we have some macro news floating around, geopolitical news. So now Ukraine is invading Russia. And I just want to be clear that we're all getting this. Top Ukrainian commander says his forces now control 1,000 square kilometers in the Russian region. So this starts to beg the question of what exactly are we doing over there? And this is starting to raise a couple eyebrows. Now, for a couple different reasons, obviously, but we have a war on several different fronts that can start combining. And I think that this is starting to raise eyebrows a little bit. For example, the whole reason that everyone got behind Ukraine is because there was an aggressor. And now that aggressor is being invaded. Now, we could all say it's war, and I get that. But this changes the landscape in the context of the talk. Because now you have Ukraine going into Russia. Now, people will say, well, they're doing it. No one cares. It breeds huge uncertainty to think that Putin is not going to escalate this. So now you have an escalation of the Ukrainian-Russian conflict. No matter how you view this conflict, we could have that talk at another time. The bottom line is no one can say that this is now de-escalating. It is escalating to an area that nobody really thought that this was going to escalate to. That is the first thing we're dealing with. Next, we have what's going on between Israel and Gaza, and we know that there's an escalation going on over there right now. We know that this is very important. For us, the most important part of this is what is the game plan over there? So here's the real crux of the issue if I had to map it out. The first part of the issue is this. Number one, you have Ukraine and Russia, and that is escalating, and there's no clear sign of how that's going to end. The second part that you have is the Middle East, and we have Israel, and then you have Gaza, and you have what's going on there, and then you have what happened in Iran, where someone was assassinated. It's happened in a couple different countries. So this is spreading. We can all have that conversation about should it spread, should it not spread. That's not why we're here. We're here to say what's going on with the market and why is this happening. So this is escalating and this is escalating. At the same time, you have Putin, who is meeting with Iran's leader. So just so we're clear that has taken place this weekend. It's not getting a lot of attention. For what reason, I'm not really sure. But it's not getting a tremendous amount of attention. And Japan is in talks with China right now in their relationship with Russia. So no matter how we look at this, it's escalating on all fronts. In between this, you have internal battles. We have our current election that's going on in the U.S. here, for those that are in the U.S., and we also have clashes with his own defense minister over the war aims, meaning what is their goal over there? And this becomes the same situation that we had earlier. What is the goal? Now, when you start to see this kind of stuff, it breeds even more uncertainty. Let's get rid of this. Netanyahu slams his defense minister for questioning the goal of total victory in Gaza. And really what the defense minister said was, what does total victory actually look like in Gaza? And that's a legitimate question for a defense minister to ask. What exactly is the goal here? What does total victory look like? Instead of these incessant escalations that we see going on in the world. Now, I want to be really clear about this. My position with this is to look at this on how it's going to affect the global stock market. That's all my entire position on how I'm viewing this. You have escalation between what's going on in the Ukraine and Russia at a time when you have a U.S. election coming up. And in between that, you have relations between Russia and Iran getting stronger. At the same time, you have a battle going on, and we're actually having their defense minister even question what is total victory? What are we going for here? That is an issue that I think should even be addressed with Ukraine. What exactly is the goal? And what we're seeing is this, and this is when the market dropped and fell apart. U.S. deploys ships and fighter jets to Middle East as Israel braces for Iran attack. I want to be really clear about what Austin said, and that is the defense secretary. And the reason for this is because he didn't come out to say stabilize the region. His statement was to protect Israel. And they choose their words very carefully. Now, he could be saying that for a whole litany of reasons. But us sending ships and jets to the Middle East is not going to de-escalate anything. It's going to escalate everything. No one's going to go, okay, well, they're here, so we're all going to stop now. Okay? That is delusional. And I don't think anybody really believes that. The market certainly didn't believe it. And that's why the market sold off. And that's when oil went higher. Now let's take a look at some technical levels about what happened today and how we can profit from it. What this is telling us is exactly what we thought. We have a lot of issues out there. And we have issues that, quite frankly, I can't quantify. So whenever I see this kind of stuff, I very simply just get it out of the way. I find it to be probably the best thing to do. I can't quantify the risk. If I can't quantify the risk and I don't know what's going to happen, why do I want to hold new positions overnight? It's extremely rare to do that. Let's take a look at the 40 sectors and what they're telling us. So we can see really pretty clearly what's happening right here with gold, and then you have the exploration names moving. China, you have the XLK that was actually up. We're going to get to that in a moment, but it was really the oil names, energy names, and some of the utilities, XBI that benefits greatly from interest rates as well, and semiconductors, which was a nice change of events. But overall, on the Qs and then looking below it, everything else was really just puking out. Now you have this 11 o'clock level right in here. If you take that 11 o'clock and you just drop to that, and this is why I really like these charts, because once you can get to that where the news actually hits on what's going on, and you take a look from that level, what you do is you just drop a zero line from that level. And then you know, okay, from that time on, once that news hit, what went up, what went down. This is like a little really quick trick, I guess you could refer to it as. It just tells you what's going on. Okay, so biotech, and then you have the Utes, XOP, XLRE, not surprising, XLE, you have some of the home construction names, and IWM. Okay, that's what was up on the day out of 40 sectors after that news hit. That's really important to note. So that just denotes that everything, once that news hit, it changed everyone's perspective on how they expected the day to go. Because if you looked at it from the beginning of the day to what happens after a news event hits, then it tells you what people are doing with the names. So when I see stuff like that, I tend to get out of the way and not wait. I don't want to be the last person getting out. I want to be first. Now, before we get into some of these charts, I just want to remind everybody, this was July 11th, and that was the high of the market. That was CPI, and that's when it turned negative. Now, just for those that don't remember, this was the bottom where you were here. And this bottom formed why? Because Powell said that they're going to start cutting rates. This is a negative CPI, and there has been no rate cuts since that time. If we do the simplest of things and we just drop an anchored VWAP from that point, we can note that we're still holding. So the question is, did we bounce because of the oversold and then lift up? These are the questions that you're going to have to start asking yourself. Now you can see how this lifted on the Qs. We got over the oversold bounce right here. That happened obviously on Monday, and now you've worked that off, and now you're trying to lift. I usually don't use this line, but for time's sake, I'm going to leave it in. Here's the larger issue that I'm starting to see and I'm starting to wonder about. But let's get rid of the RSI for a second and just go through this. So you may or not remember this, and some people are going to and some people are not. This was a CPI number, and this is when it came in worse than expected, and everybody puked it out. And they're like, that's it, we're going much lower. And you can see right here that that became the bottom of the market. You're not to play with these levels. Now, am I saying the top's in? No one ever knows that. What I'm saying is you have a lot going on right now. You have two fronts of a war. Those two people actually met this weekend, as I said earlier. We're escalating it. We're going over there. So we're escalating, good or bad. It doesn't matter how you feel about it. But that escalation is leading to people buying gold, buying oil. So if you want to play that game, it's gold and oil. And you're doing this going into PPI and CPI, and then you have retail sales on Thursday. This changes the dynamic on how I felt about the market very simply because I think there's more risk right now, and I think that's reflective in the VIX. I think I would be remiss in just not pointing out that this was the low, and that was a CPI date, and this is on a weekly chart, guys. So when you go there and say, well, it's not the date. So, and then this is on the weekly as well, and you're actually over here on the 11th, as you guys all know, okay? You need to make sure that you hold this. I'd feel a lot better if this de-escalated, quite frankly, and that's it, and that's where my head is with it, but we'll see. But I think you have to pay attention to this, guys. I think this is really important. Now, as far as other sectors out there and other things to look at, I have a couple ideas out there that I think make a lot of sense. I would watch what Bitcoin does. I know a lot of people out there think that this is going to be the hedge. I'm not sure that it's going to even be material as to what happens right now. I would view it as risk on, risk off is kind of where my head is with it. I think you have to be super fast here. And if you're playing swing trades, I think you have to be very adaptable. And I'll show you why. Whenever the Q SPY is like this, so the Q and the SPY is down, right? And you can see that the SPY is starting to outperform. It has been ever since the bottom. So this is Q relative to the SPY. And this is something that I've used for years, and it served me well. I thought we had this figured out today with the color change, perhaps not. So when I drop this in, as soon as I am below this on a 55, so if Q's relative to the SPY. Whenever I'm below the 55 on this, I just put the brakes on tech. I bought tech in here, and we had 3 trades, and we're out of them, so I'll just walk you through exactly what we did. I bought Apple, and we were up $2.50, $3. And I'm looking at that going, do I really want to be in that going into the escalation of war? And do I really want to be into that now that the gap fill has happened? So in other words, the gap fill happened, and how much more risk do I still have to the market? So is this showing me the correct amount of risk? Because it should have pushed through. And then what happened today as soon as that news hit? And this is, again, it's really important to keep your head on the swivel. Once you broke down, that was it. And you can see this all the way through. Like nothing phased it, right? Absolutely nothing was phasing this once it got going. You never came back to here. It just kept grinding and grinding and grinding. Then all of a sudden, once you got up to this level and you got back up to here, watch what happens. And that would be your gap fill right here. And then what happens to that gap fill? And then you have news hit, and then that's it. So now I'm at a spot where the gap fill, I have all this other stuff factored in, and I'm back to the same price point, and this is what I get. And then I never get through that level. And it's really important, guys, to mark off these levels. I can't stress it enough to you. Because they're the players, not us. They're the guys that are making the rules, not us. We don't move stocks, they do. No matter how hard you want to believe that you can do this, you can't. So that takes billions to do that. Okay, that just doesn't happen. So when you start to see them turn money over like that, and those lines are marked, they're big levels, and you want to pay attention to them in your names. All right. So keep that in mind, and if you go through them, so Apple was something we made $2.50, $3 on. Meta was something that I got out of. Now, Meta's a little bit different, and I'll just point this out, because here's the down bar, and we flipped it. And I do like that you flipped it here, but do I really want that risk going into the numbers? I probably would have taken the PPI, CPI risk, but do I really want the other risk? Do I really want the escalation of war overnight and then I'm locked in? I don't think so. I think I want to see how it comes in tomorrow. And then we had cost as well. And we did exceptionally well with this trade. In a very short period of time, we were up like $20. And I'm just watching what happens. Now, again, watch how this plays itself out. And this is really important. Here's your level. Got to it. Looked like you were going to go. As soon as you got back up here, Matumbo, broke that level, retest that level, and then you broke down. And you can just see this all day. And that was pretty much it. So 3 days or 2 days we're in these names. It was actually 2 days. I mean, why not just lock it in and get out of the way? Now, some people say, oh, I want to invest for long term. That's great, guys, until this thing's at like 820 and you're staring at it, wondering what you're supposed to do. And you need to understand, why am I saying this? Because the amount of risk that's in the market right now. When the VIX bounces like this, off of this level, if that flips a higher high, you're going to have risk off again. And you're going to see a lot of people get involved there. And this is really important because you can still take advantage of the swings, because you're going to have people that think it's going to be a risk off and then it's not, and then you're going to have them turn. So one of the trades that I do is when we sell down, I always look for highly shorted names or names that people were just puking and they're out of position on. So one of the things that got us today on SMCI, we actually went long this with calls and did exceptionally well with it. And the whole reason behind it was simple. As the market was dropping, once we started dropping, this started going higher. Now, later in the day, obviously, you have your peak, like every other name, and you can see the double top right here. And this level shouldn't really surprise anybody that knows and been trading this name. And you can go back all the way through these and see those levels. But once you got to here, you kind of knew. But anyway, so in here, I think we paid $11 for them in the last time that, up here they were significantly higher, 535s, 540s, didn't really matter which ones you did. But even up to 45s. But anyway, you're rallying and the market's selling down. So while you're rallying, the market's puking in the beginning of the day. They're the names you want to watch, because once you see a key level on an index like the ES, you see how these names act. So take this out for a second. We'll clean this off and I'll show you what I mean by this. And this is something that you can do yourself very easily. So if you have a day like today and you know that where your levels are, for example, you would know that this gap fills obviously a big level, right? I mean, anybody would know that that gap fills a big level. And if you don't, now you know gap fills are big levels. And you took the top of that, you can see again how you were unable to close on a higher high over that. But then here, that was resistance over and over and over again. And here we are, right? So here's the breakdown, the rally, the failure, and here. Now, if you open this up, those levels on a 1 minute chart, right, you can see this. So when we sold down, at the time we were selling down in here, and you can see this, we'll do it this way so that you can see it line for line. And I'm going to do a price action video on this because this is a really simple way to benefit from these kinds of breakdowns. And it might be that we're going to be doing this kind of trading for a little bit right now until the stuff settles in. But if you take a look right here, and that should get us where we need to be. Perfect. But you can see how the ES is dropping. And at the same time the ES is dropping, you can see that SMCI is going up. See it? Retest, lifts, and then goes. Once the ES lifts, look what happens to SMCI. Why does that happen? Because it has high relative strength. This is going up, and the market's getting shellacked. So this gives us the opportunity to take advantage of that and get into the trade. Here, take a look at this. This thing looks like they're just going to squeeze the heck out of people today. If we push, that's going to squeeze. But the August 16th, 5:45 calls, I'll tell you exactly where my stops are. Here's my stop on half of them. Closing below this on a 5-minute bar. This is my stop on the other half. I paid $11.70. They're at 13. I'm going to pull something out of those. I think 45 is where we could get to, that level right here. This is where I think you're going. Now you still have to deal with this, and this is what's stopping you right here. That opening price from that day. Right into this, I trimmed. Now you're flipping. If you're playing this super close to the vest, if you close below that level right there, then you just kick it. Right into that SMCI, I paid 11.5 for those, 17.70. Right into that, I'm selling some. Right into that push, I sold some. What if you get through? That would be awesome. We would be victorious if that happens. We'd be high-fiving the bros. I don't think it's going to happen, though. I don't know. Wet blanket, womp womp. If you're not trying to hang out and see what it's going to do, you just kick it right there. We would just kick the whole thing out. You would just watch that. You see how it broke right there? You'd just be gone. So I sold some more right there, and the rest is at break even. Now, tomorrow we have PPI. PPI usually does not come out before CPI. They usually do not. And you're looking at 0.2 here for core 2.7 year-over-year core. Core is X food, X energy, because who needs those things? Month over month includes everything, year over year. And what we would do is just take a look at month over month and click on this for a second. This is important, guys, because your forecast last time was for 0.1. You came in at 0.2, which was hot. Now, CPI month over month actually came in negative. If you'll remember that, and the market sold off. People are going to look for this, and they're going to look for an indication of how this is going to go. My sense of this is that if this is too hot of a number, that we could have an issue. If it's too cold of a number, we could have an issue. And I think we need to be in that sweet spot. Weak is no longer good. Strong is no longer good. So you need to be in that sweet spot. Now, hopefully we don't see any escalation overnight, but in regards to PPI month over month, you can just see it's been getting tighter and tighter in here. And that's certainly something that we're going to want to pay attention to. In regards to how would we react to a hot number, if you had a super hot number, let's just say we spike up, you're going to see yield and interest rate investment activities, those kinds of names, the REITs, anything like it, home builders, biotech, they'll all come in. You'll see those names drop. So in other words, if you go out there, if you were going to look at the XLREs of the world, those names are going to wind up coming in pretty hard. The XLUs, they'll come in pretty hard too, because it would mean that they're not going to cut rates as much, and that's going to lead to TLT selling off and TNX, meaning yield will go up, and that's going to affect things like regional banks. If it's strong and it leans that way, that they're going to cut, and this 50 basis points might be something that happens, those sectors I just went over are going to rally. This is where it gets weird, because what happened last time was RSP rallied. Right? And we all remember this, and we'll go through it, but RSP rallied last time. S&P started to sell off. Now, you may remember this, but we'll go back and take a look at it again so you can just remember exactly how this played out. And it was, I don't think people were used to it, and they shouldn't be, but you can see the cross right here already. It's not normal for this to happen. And what I've been getting people to do at this particular time is putting a line here. My concern here is secondary as well. See how the RSP is getting back under that zero line from that 11th? That means that you're now negative, or you've been negative on the RSP, the equal weight names as much as the market weight names. That's not where you want to be. That actually is telling you that the breadth of the market is getting worse. So what we were hoping was follow through on the breadth today, which I thought we would have gotten, frankly, if we didn't have the issues we had outstanding with what's going on with the war and the escalation of that war and how it's escalating on two different fronts. But you're starting to see, I was hoping that we get some kind of lift here. You know, I guess I can hope for anything. So, but if we're looking here, this has been the leader. So we would expect a negative CPI number and we'll get into that tomorrow night. But if you have a really weak number, you would think RSP is going to lift again. What you're not going to expect is this, and I think that this is where your head has to be now, because bad news is now bad news. So what I'm doing is I'm still using that 11th CPI number so you can see this, and you can see where you're at, see how this is playing out. And I'll spend some time on this tonight and just show you one of the things that's pretty glaring to me. But you go to that date, it's 8%, you're here and you're here. This is not ideal. It's not. I would have liked to have seen more follow through today. I didn't get what I wanted. It seems to me that maybe there's a retest of some of these levels. We'll see tomorrow. We'll see what happens with PPI. But please keep that in mind now. And I will do more on this tomorrow, but I just want to give you a heads up because tomorrow you do have a number. I always have PPI tomorrow. I always go here and just go, okay, here's the first day of June. And then I would take the end day of June, which would be right here. And I would look at this and say, okay, I think CPI could come in higher because this is higher, okay? Meaning crude oil. If you've been watching these videos for a couple of years, this is fairly accurate. You've been watching me do this. What is troubling to me about this time around, this would have been July's reading. That was a 9.5% move and CPI was still weak. And so what's bothering me about this now, because oil and gas are in everything. So if you don't want to do it this way, after we do it this way, I'll show you the other way that I do it as well to look at it. So now if I look at it this way, and I think there's 31 days, there you go. And we took the pricing here and we go to that day. I'm 5% on crude oil for the month of July. So I'm down on oil going into this number, where before I was up and the number was still weak. So there's a lot of moving parts to the number, but oil is in everything. If you go and take a look here in regards to gasoline futures, for example, and you did the same thing with gasoline futures and you just said, okay, here's June 3rd, and we're going to go to the 30th and mark this off so we can just say it. And that would be, let's do it right there. Okay. And so from here to here, and you could tell that we're up. So even with gas up, CPI was down. It got destroyed, right? 6%. So if I move to over here and then go to July 30th once again, and you come over here 31st, and I mark off those dates, and I go from that here to here, and I get down 5%. So these numbers based upon gas and oil are clearly going to be weaker. Like that's just the way it is. I mean, and then how much that permeates through everything else is really going to be the question. We'll see tomorrow at 8:30. That's it.